All right, guys, welcome to my channel. In this channel, we cover stock market technical analysis. I try to read the charts and anticipate where stocks are going ahead of time, which is what we did for this big drop that we had. Go back and watch the last couple videos that I've got, 3, 4, or 5 videos, and you'll see that I was calling for this drop and showing everybody that I was basically getting short, and we caught most of this drop. I didn't catch all of it. I didn't catch the big gap down, but I caught all the rest of it, including the gap down last night. I was short a full-size position last night, and we caught the big gap down. And what have we done today? Well, I reversed long this morning and captured the profit on the gap down, and now we're making money on the way up. And here's what I'm looking at and why I think we're going to get a little bit of a bounce, and we've already gotten some of it. So here's your Nasdaq futures. And Nasdaq's the most important index to watch, so that's the one that we're really paying attention to, because this whole the whole bull market's been tech induced basically. So look at you got support right down here in Nasdaq, or sorry, here's your support right here at Nasdaq futures 8702, and you even have a little line right down here. We didn't quite get down to here at 8481, but we did recover this 8702. You can see right here, we recovered that. So as long as we hold above that, that looks good for a long side. And then let's look at the Qs here and let's pay attention to what we see. On the hourly, you'll notice, this is something I want to point out. Here's your initial thrust down, and where we broke this line up here, where we recovered back below this trend line. And this is when I started calling out the fact that the Qs looks like they're heading south, because we broke, and I actually got short right here, right up here. And I have a video showing exactly, and telling everyone exactly I got short right there, a full-size position. And basically, this is your breakdown, and then this is your bear flag. And so typically when you have an initial thrust down and then you flag out, you're going to, most of the time, continue to the downside, and the measured target is exactly the flagpole. And if you look here, I've had it marked out, but here's your flagpole, and if you copy this and then take it, what you want to do is take it from the top of the flag right there. So you can see I've got it right to the top there, and look at where that here's your measure target right here at about 207.98, and the low we got to today was 207.78. So pretty good, 20 cents. That's basically right there, and that's your major target. So now we should see a bounce. And first stop would be this gap fill that we had, 216.35. I think we're going to head up there and then probably get a little bit more than that. Probably get up to this range, this consolidation range right here. There's this gap right here that everybody sees. I don't think we're going to fill this gap. I think I'm not going to try to take profit or, run it all the way to this gap. But here's the gap. We could fill it. I mean, if we came into the gap and filled it right here, that's a sweet spot to get short. And that's because you're backfilling a gap. And at the same time, if you hit it right in this area, then you're also hitting it right. You're backtesting this trend line right here. Okay, so you can see this trend line goes all the way back to this recent rally we've been in. So if we come up and tag it right there, I'll definitely be getting short right there. But most likely I'll be getting short right here at this 224 range. This is the area I'm looking for this kickback rally to come back up and hit, and then I'll be looking to get short. So and believe me, once this rally starts, if we do get a kickback rally, everybody's going to think that the selling's gone and the coronavirus is all over and it was all just a short thing. The reality is that this market right here started selling off before any of the coronavirus headlines were on the news. And I pointed that out. I said, look, here's your breakdown. The chart's showing a breakdown. And then they come out with a reason why it's selling off. It's coronavirus. Well, okay, fine. You want to go with that? That's fine. But it started to sell off and break down before you guys were even talking about any of that. So, and that's why most likely if we get a kickback rally and then we start to sell off again. You'll hear the headlines again. You know, they'll talk about how things are all okay now, and we'll start to hear some positive news around the coronavirus. It'll recover, and then if it starts to sell off again, there'll be some bad news. Headlines follow the charts most of the time. It's not the other way around. So I'm looking to get short up around this 224 if I can get there. But first stop is we got to fill this gap. So here's your gap at 216.35. I think we do that. Also the SPY. Let's look at the SPY here. This is an interesting chart. Let's go to the daily here. So here's a trend line that I have marked out, and you can see lots of reactions around this trend line. And we undercut that just today, and we've since bounced back and recovered. So that's bullish. That shows that there's some support here. People are buying. People were buying this undercut. I was one of them. So let me get rid of this here. And so you can see we're right at it. If we're able to rally from here and move up, then that's going to hold the support, and we're going to just use that trend line as our stop line. So anything underneath that, we would stop out on the long trade, and then we just let that continue to run. So that's bullish so far today, as long as we can hold right up there. Now, if they reject it right here, then that's bearish, and we're going to head south. So as of right now, I am long the triple Qs, a half position. I want to kind of point that out. I think that we are entering into a bear market. The chart tells me that. The SPY chart, if I go here and look at this weekly chart, this is exactly what I've been talking about this entire time. Okay, I've been almost every single one of my videos I show this, but here's your bull market trend line, and we reject it, and we've got lots of reactions around this purple trend line here. And here's the failure back in 2018. And then the Fed saw this and they reversed their stance trying to save the bull market. But the damage was technically already done. And that's because we broke support. And so all that the Fed optimism and money pumping and interest rate cuts, all they've managed to do is create a back test of the broken trend line. And here's your back test right up here. Again, this is a weekly chart, so things that happen are very longer term. But here's your back test right here, and we overshot it just slightly, and then the very next week instantly failed and then a gap down and a big impulsive sell-off week so far. So that's as far as it can get on a sell signal. So any kind of kickback rally we get should be sold. I think that because the bigger picture charts are completely wrecked and we're heading lower, and that's the way I see it. So I think we're heading all the way down here to 212 and 180 or 187 on the SPY, and entering a bear market. So that's the way I'll be trading it. I'm looking to get short again, and if we can get any kind of kickback, I'll be looking to get short. There's no way objectively to see this and say that that this wasn't a powerful sell signal on the weekly chart. The last time you saw a candle this bad was back here when we broke the trend line, and so I think that's it. I think we've topped out in the bull market. I think we're entering a bear market. Yes, you're going to get kickback rallies. You're going to have weeks that kind of go up and kind of suck people back in, especially right now, since this is the first move down. A lot of people, they don't see these trend lines. All they see is this. They see, a pop. They see a dip. They see a potential buy spot right around here where we stop short, and they see, us moving to higher highs. What I see is trend lines, and I see a failed, I see this failed trend line right here. Okay, I see a failure, a breakdown of the trend line, and I see a back test and then a rejection. So I think we're heading lower, and that's how I'm going to trade it. KHC, I bought this one today, and basically bought it right down. I have this trend line. I've had it marked out for months. 24.89. We dipped slightly below it. I took a position right there. Now I'm looking for this thing to at least have some sort of a kickback rally. Maybe we get up to here, up to 28. We're just going to have to play it by ear and see what happens. But I'm expecting this to at least have a reaction where we hold this support and then move up a little bit. So we're going to go ahead and continue to trade that and see what happens there. Let's look at gold and some of these gold miners, and then we'll wrap up. Okay, so one of the reasons why I'm really interested in trading gold right now is because of the dynamic that we have in a kind of our monetary system with the Federal Reserve. The Federal Reserve has been backed into a corner. They've run out of bullets in terms of interest rates. I think we've come kind of the end of the 40-year-long bond bull market where bonds have been rising and yield or interest rates have been falling for 40 years. We've come to pretty much zero for the last 8 to 10 years. They raised them just slightly to a percent and 3/4, and then instantly it started to taper, reduce their balance sheet, and then instantly reversed, and they're heading back down, and their balance sheet's going back up. So that is inflationary. And that signals to me the bigger picture is an end of that bond bull run, which should usher in the next bull market in gold. And that's exactly what it's done so far. We've seen gold really bottom out. If I zoom out to the daily chart, we've got this rounding bottom here, which is an accumulation pattern, and we've broken out to the upside. And bigger picture is we've broken through resistance. Resistance is now support, and we're in a bull market of gold. So basically, and to classify a bull market is you're making higher lows and higher highs. Well, here's a low, here's a higher low, higher low, higher low, higher low, and then your highs, you can see it as they tick up. So we're going to continue to make our way up. At least we should, it could end at any time, but the trend is not broken, so you got to continue with that trend, and we should continue up. And this is on a daily chart, and all the bigger picture charts, here's a monthly, they've all broken to the upside. So right now we've got a low of support of 1566, and we've got a high of 1900. We should continue to work our way up. That's on a monthly chart. Let's look at the daily here. Daily, we've got support at 1612. We've also got support at 1565. So I think we probably get down, if we have a rally in the stock market, then maybe gold comes down and tags 1565. But I think that's a buying opportunity. And, that's the way I see it. Gold is dipping a little bit today, but still holding its own. I mean, ultimately, you see this is a flag. This is a bull flag, and it's flagging out, and so it should continue to move higher. Let's look at Barrick Gold. They're punishing Barrick Gold today, and I have a position in this, so that doesn't feel good. But my triple Q short and long have made up for whatever losses that I have. And again, I'm not really looking to trade this position. I'm looking for higher prices. So where are we going to? Well, we could easily come down to this 1899. I see a lot of support there. That's kind of the top of this last pattern that we just broke out of. I don't think we're going to get there. We might just undercut this 1996 and then overshoot. And I get that from the peak right here. And if I scroll out, I think it probably comes in other areas too. Let me look at the daily here. Yeah, I mean, basically, you got a little bit right up in there. Yeah, you can see if I kind of extend this out, this is, if I can select it here, you can see it's kind of the top of this range here. So it's trying to fake us out, basically. It's trying to make us think that, look, it topped out here in this area, it topped out in this area, overshot it a little bit, and it's doing the exact same thing. And it might be, but I think rather it's actually breaking out, and this is just the pullback because you have this downward channel here. You broke out of that. You're shooting higher, and I don't even think we've hit the objective breakout target. Let's look to see if we have. Here is your breakout. You can see it goes all the way back to here. There's the top. And if we do a copy of the flagpole, same as I showed you on the Qs, then, and you go right there, then we've got higher to go. So basically, in this one, that would be 2483 would be the measured target. We haven't hit that yet. So I think we reverse somewhere right in here. The buyer should step in and we start making our way higher. So I'm good with that. This one I've been talking about AEM. It's not working out. I'm no longer in the position. And the reason why, I think we get better prices. I think that there is a buying opportunity here, but I think we get some better prices. So the prices I'm looking at is we have this gap that this is where we traded it last time. I entered the position right here and it ramped up and I sold it, made a nice little profit, but then it's, now it's heading, it looks like it wants to head back down. So if it gets back down to this range, I'm not really interested in buying it here because it's already had the initial reaction. So I think if we get back down here, and it doesn't hold, we're looking down here at 1440. That's a good buy somewhere right around this range, depending on when we actually get there. That is an area that I would definitely be interested in buying this AEM, which is another gold miner. And you can see that's your support that rolls out here. And then we also have this support shelf right here. So that is a great target zone. If we can get it down there, I'd definitely be a buyer there. SLV, silver, great spot. This is an objective area to buy right here. I bought yesterday right up here at 1666, but 10 cents undercut it. We're right here. We're actually back testing this flag. So here's your flag, and again, measure the flagpole. We haven't quite got there, so I think we're going to go a little higher. But this is a clean back test. This is an area where you could go long SLV, and it should start to move higher. That's it for the video, guys. I'm going to go ahead and wrap it here. Give me a thumbs up if you've been following along. Give me a thumbs up if you like the content. And be sure to hit that subscribe button. And I'll continue to put out the videos. Thanks, guys. Catch you on the next one.